Welcome to a thrilling dive into the heart of today's cryptocurrency landscape.
We've gathered insights from top experts about Bitcoin, Ethereum, and the latest buzz in the meme coin market.
By using our AI-driven summaries, you'll quickly grasp key takeaways, saving hours of research.
Stay tuned as we unravel predictions about the meme coin Pepe boasting a potential 300% gain.
And don't miss our next segment, where we'll explore when millionaires are relocating in 2024 and what it means for the markets.
Remember, this is all for educational purposes, so consider your investments wisely.
As excitement swells in the meme coin arena, trades are flipping rapidly. What's going on with Pepe?
Indeed, the crypto volatility is at an all-time high, with traders making moves on every uptick and downtick.
What's at stake for Pepe in this wild market?
A pivotal breakout could indeed see Pepe soaring by 300%. He's closely monitoring where it stands against key resistance.
That's fascinating. What's causing this surge in interest?
Analysts are citing bullish patterns, plus a hotly anticipated exchange listing that could ignite further enthusiasm.
With the current volatility, how's that affecting trader sentiments?
Traders thrive on volatility. It creates countless buy-sell opportunities, which can bolster overall market activity.
Despite recent setbacks, Pepe's chart reveals how it's holding some promising foundations, right?
Exactly. The current consolidation indicates a potential springboard for significant gains.
What broader factors should we be mindful of that could impact Pepe?
The U.S. elections are looming large. As interest rates drop worldwide, capital flows to crypto will likely surge.
We're seeing substantial investments from whales. What's the significance of that?
Big buys often signal stronger conviction in a project, potentially fueling a rally.
Pepe Unchained sounds intriguing. Where do you see it fitting in the big picture?
It's poised to challenge established names in the meme coin space, especially if their Layer 2 functionality succeeds.
What concrete predictions did Clay make concerning Pepe's future?
He believes that effective breakouts could triple Pepe's value, especially with solid backing from major exchanges.
What about the broader meme coin market? Are we anticipating another wave?
Absolutely. Historically, when retail jumps in, peaks can rise swiftly, drawing even more liquidity into coins like Pepe.
So, after all this, what's the most important takeaway for our viewers?
Stay alert and watch for breakouts. Pepe and its offshoots could be primed for significant gains.
It seems strategic watchfulness is key in these rapidly changing markets.
Indeed, the meme coin landscape is volatile but ripe for opportunity. You won't want to miss it.
Today's fascinating topic is where millionaires are moving in 2024. It seems like the wealthy are packing up and heading for greener pastures.
Absolutely. With the latest data highlighting a projected 128,000 millionaire relocations, it's crucial we dig into what's spurring this trend.
So, what's the core issue driving all these millionaire migrations?
It seems to stem from tax structures and stability. Countries offering favorable conditions are attracting the most wealth.
That's an intriguing observation. It raises questions about the future economic conditions in both sending and receiving nations, doesn't it?
Exactly. It's like a game of chess where these billionaires are choosing their moves carefully.
It's jaw-dropping how the number of millionaires migrating has skyrocketed. What stands out the most?
The sheer pace. It's grown at a staggering 67% faster than the overall millionaire population. Definitely eye-opening.
Let's break down who's losing the most. What's the leaderboard look like?
Right at the top is China, followed closely by the UK. It's alarming how quickly these numbers are rising.
What are the specifics behind these moves? Why is everyone leaving?
Economic factors, for sure. Countries with high tax burdens or political instability are creating exoduses.
And what about the countries receiving these millionaires? Is it all sunshine for them?
In many cases, yes. More wealth can mean a boost to economic growth, but it also drives property prices up.
Let's touch on the markets. How does millionaire migration play into that?
Great question. The trend is often bullish for financial assets, including crypto. Wealthy individuals tend to invest where taxes are low.
What can we expect in the next few years regarding these migration trends?
We're likely to continue seeing millionaires seeking low-tax havens, which could reshape economies globally.
And the property markets, how might those be affected?
Cities can expect significant pressure on housing. Rapid price increases are often the first sign of wealthy influx.
Bringing it all together, what should viewers take away from this migration phenomenon?
Understanding the drivers is essential. Countries need to adapt to these attractive tax environments or risk losing more wealth.
Quite a thrilling look at millionaire movements, right?
Definitely a sign of shifting sands in wealth and opportunity.
In today's video, Lark Davis dives into whether it's time for Ethereum holders to sell. The market sentiment seems to be shifting.
Absolutely. While Bitcoin and meme coins are thriving, Ethereum's performance raises eyebrows, especially for those still holding bags.
What's Lark's core argument about Ethereum's current standing?
He presents a dual perspective. On one hand, ETFs for Ethereum are underperforming compared to Bitcoins, signaling potential trouble.
But on the flip side, there are still foundational elements that make holding Ethereum worthwhile, correct?
Precisely. This historical context makes Ethereum a compelling bet despite its current setback.
What's happening with Ethereum ETFs? It seems there's a clear disparity.
Indeed, Ethereum ETFs aren't seeing the same traction as Bitcoin, which raises legitimate concerns.
How does Solana factor into the narrative of Ethereum's struggles?
Solana is gaining traction, especially among those looking for efficient transactions and yields.
What about Ethereum's long-term position? Is it as wobbly as it seems?
Not at all. Ethereum's developer community and innovative projects are vital to its resilience in the long run.
Does Lark provide any historical context to support holding Ethereum?
Definitely. He recalls last cycle similarities where Ethereum lagged before making significant gains.
What does Lark foresee for Ethereum's immediate future?
He believes that Ethereum's price might soon see a bullish breakout, echoing patterns from past cycles.
Are there any innovative solutions being pushed to revitalize Ethereum?
Absolutely. Moving to Layer 2 solutions could bolster Ethereum's usability and adoption.
So, what's the takeaway for Ethereum holders?
Hold tight and assess your position. The landscape could shift again based on historical data and ecosystem growth.
Final thoughts on the urgency to either hold or sell.
The impulse to sell should be tempered with strategic foresight. Ethereum still holds promise.
In today's chat, Joe and Joey, two prominent VCs, share their perspectives on Bitcoin's trajectory and ETF influxes. Let's dive right in.
Absolutely, it's a fascinating time as we explore how market dynamics are shifting alongside potential election outcomes.
What's the core argument here about Bitcoin's future?
It's about these ETF inflows, but the actions of institutional traders and political factors may redefine Bitcoin's role versus altcoins.
Let's start with the ETFs. They've had a tremendous month. But isn't there a catch?
Indeed, those inflows might not reflect true institutional confidence, as they could be driven by speculative behavior.
What happens to the crypto market if Trump secures a win?
Markets thrive on certainty and might respond rapidly, especially in crypto, leading to significant price movements.
Are we about to witness an altcoin season as Bitcoin dominance wanes?
Yes. As investor sentiment shifts, we might see a compelling move into high-potential altcoins when Bitcoin hits certain price thresholds.
What's the likelihood of meme coins taking a more prominent role?
Strong. They're providing a new layer of engagement, similar to the NFT craze, likely sparking a market shift.
If Trump wins, how quickly might Bitcoin approach 100K?
It's plausible. Upward momentum could push it faster than many expect, particularly as markets chase high valuations.
What are the key takeaways viewers should remember?
Stay agile in your asset allocations. This market is unpredictable, and strategic shifts can yield major rewards.
Today, we're diving into Benjamin Cowan's recent assessment of the labor market and Bitcoin's future. Let's unpack his findings, shall we?
Absolutely. It's a fascinating intersection of labor data and cryptocurrency.
What's Cowan's main message regarding the labor market and Bitcoin?
He suggests that while the unemployment rate appears stable, the increase in permanent layoffs could foreshadow trouble for Bitcoin's future.
That's an alarming combination. What specific trends should we look out for?
The rising job losses and regional unemployment rates could impact market sentiment significantly.
Let's explore those unemployment numbers. It's interesting to see a steady national rate, but what does that mean?
The stability might mask underlying issues like the rising permanent layoffs.
And how does this relate to specific states?
Cowan notes that many states maintained constant rates, suggesting the market may remain relatively unaffected for now.
Job openings have seen a sharp decline. What does this indicate?
It shows potential cooling in the labor market, which could lead to tighter conditions.
And what about employment growth? I understand it's just hit a cycle low.
Exactly. The recent low adds to concerns about the overall health of the labor market.
Now let's connect all those points to Bitcoin. How's it holding up?
Cowen notes it's a critical decision week for Bitcoin, with labor data adding to the volatility.
The interplay with labor data sounds crucial. What do we expect next?
It will likely depend on how these labor signals are perceived by the market.
What predictions does Cowen have for Bitcoin?
He anticipates volatility as Bitcoin tests its support levels, driven by labor market signals.
What should viewers keep an eye on?
Critical trends emerging from weekly closes in the Bitcoin market.
In summary, what are the key takeaways from Cowen's analysis?
Staying informed on labor market developments is crucial, as they could significantly impact Bitcoin.
It sounds like proactive monitoring will be the name of the game.
Absolutely. Being vigilant about these trends is essential for investors.
What a fascinating discussion we had today on the intricacies of the cryptocurrency landscape.
Absolutely. Benjamin Cowen really brought up some eye-opening points about Bitcoin's critical decision point, didn't he?
He sure did. And considering the mixed signals from the job market, it does make one wonder about future volatility.
Right? And we have the VC experts talking about how political outcomes might sway investor actions towards altcoins.
And we can't forget Lark Davis, who despite Ethereum's struggles, provided a glimmer of hope with its foundational strength.
Exactly. Plus, how exciting is the meme coin scene with Pepe potentially set to soar in price? Claybro highlighted some real bullish signals.
Indeed, not to mention the significant economic implications of the projected millionaire migrations discussed by Coin Bureau.
This has truly been an enlightening session packed with insights. Don't forget to hit like and subscribe to support us, and stay tuned for more valuable content.
Thanks for joining us, and don't miss out on our other videos covering the latest trends in finance and crypto. Until next time.